In this video, we are going to cover what needs to be considered by the auditor at the acceptance stage of an external audit. This is the very first stage in the audit process, and it is in general terms whether they should continue the audit assignment. There are two situations. Either the auditor will be considering whether they continue to act for an existing client, or they will be considering whether to accept a new engagement. Either way, both of these situations will require the same process to ensure the correct decision is made by the auditor. The new audit clients are generally gained by three methods: client request, advertising, and tendering. Clients are often recommended by existing clients and may contact the auditors directly to take on their audit work and other services. Advertising services often results in new clients approaching them. The tendering process often occurs with larger, often listed clients. It is where several audit firms will set up presentations to the potential client to promote themselves as the best audit firm for the assignment. The company will then select which audit firm they were most impressed with. Whichever way the auditor gains a new client, care should be taken as to whether the client should be accepted. There are many considerations as to why they may not want to accept an audit assignment. These considerations can be split into two stages: the preconditions of an audit and any other acceptance considerations. Stage 1 is the preconditions of an audit. If the auditors are not satisfied with the preconditions, then the auditor should not continue any further with the audit assignment. ISA 210 tells us that the preconditions are: is the client following an acceptable financial reporting framework? And does the client management accept their responsibilities? The auditor would need to consider whether the financial reporting framework is appropriate. For example, is it consistent with previous years, as well as if it is appropriate to the organisation? In terms of management responsibilities, they must accept that they prepare the financial statements in accordance with applicable reporting framework, ensure controls are sufficient to ensure financial statements are free from material misstatements, and provide the auditor with all relevant information and explanations necessary to complete the audit assignment. As I mentioned before, if the preconditions are not present, then they should not accept the audit assignment. Once the preconditions have been identified, the auditor must move on to any other considerations that may affect their decision to continue the audit. We will go through each consideration in detail. Professional clearance. If the audit firm has been approached to audit a new client, the best source to identify if there were any issues which may cause them not to accept would be the previous auditors. Therefore, they should write to the previous auditors and ask them if there are any professional reasons why they should not accept the audit assignment. This is known as a professional clearance letter. Professional reasons not to accept may include overdue fees still owing to the previous auditors, breach of law and regulations discovered by the previous auditors, disagreements with management during that audit, and a lack of integrity from management which may affect the auditor's reputation. It is important to review this feedback to ensure a client is not accepted who may risk causing the audit firm to act unethically or unprofessionally. This feedback affects confidentiality as it is discussing client information with a third party. Therefore, permission is needed from the client to write to the previous auditors, and the previous auditors must also get permission in order to respond. If permission is not given, it is unlikely that an audit firm would feel comfortable continuing with this assignment. Auditor considerations. I gather all practical concerns the auditor may have under one heading. They must review the time needed, the skills required, and the fee. The audit firm must ensure it is practical to take on an audit client. Audit firms must ensure that they have the time to complete the audit work properly. If they already have a very busy time of year where a lot of their clients have the same year end, it would not be sensible to take on another client with the same year end and therefore similar deadlines to other clients. This may affect the quality of the audit work provided. They must also ensure that they are able to complete the audit work competently. Just because an auditor can audit one type of business, it does not mean they have the skills to audit them all. Therefore, they must ensure they have the necessary skills and experience to deal with every client. The fee should also be considered. Fees must be based on the amount of work expected from a client. Any contingent fee should not be accepted. The risk of non-payment should also be considered by the audit firm. Audit risk considerations. While the auditors may not yet have access to all books and records, it is important to identify any issues that may indicate audit risk is high. Audit risk is the risk of the auditor giving an inappropriate opinion, and this risk should always be kept to an acceptable level. If there are indications that there is an unacceptable level of audit risk associated with the client, then the audit assignment should not be accepted. Ethical considerations. The auditors need to ensure they maintain their ethical standards so as not to affect their reputation or the reputation of the profession. At the acceptance stage, they must identify if there are any potential conflicts of interest with existing clients. If there are, both clients need to be made aware, and if they are both happy to continue being audited by the same audit firm, then appropriate safeguards for confidentiality must be implemented. The auditors must also identify any potential threats to objectivity. These are self-interest, self-review, familiarity, advocacy, and intimidation. Again, any threats must be identified, and they must consider if they can be managed. If not, the assignment should not be accepted. Based on all of these issues, a decision is then made as to whether they should accept or reject the client. If the risks are too high being associated with the client, then they should reject. If they accept, the auditors then move on to the next stage of the audit process, the engagement letter. I hope you found this video useful. Thank you for listening.